Okay. Hello. I would like to welcome everyone to this session today on electronic payments acceptance. So I would like to open this session by providing some background information. As you probably all know by now, Financial Inclusion Global Initiative is a partnership between the World Bank Group, the Committee on Payments and Market Infrastructures of the Bank for International Settlements, and the International Telecommunication Union, ITU. And the initiative, FIGI, is funded by the Bill and Melinda Gates Foundation. The original objective is to support and accelerate the implementation of country-led reform actions to meet national financial inclusion targets and ultimately the universal financial access goal. As such, FIGI funds some national implementations in 3 countries, China, Egypt, and Mexico, and supports some working groups to tackle outstanding challenges for reaching universal access. So electronic payments acceptance is one of these working groups. Along with electronic payments acceptance, FIGI also supports digital ID for financial services, security, infrastructure, and trust, and hosts, of course, this symposia that we are all now a part of. So this is the 3rd symposium, and this is one of the last sessions in this symposium on electronic payments acceptance. We had another electronic payments acceptance session at the beginning of this month. This time, what we are going to focus on is a toolkit developed by the working group and its application in a couple of countries, specifically in Morocco and in the Philippines. So what we will do today is actually we have an excellent agenda. We have the presentation of the toolkit very briefly, and then we also have the presentation of the application of these tools. And then we have the deep dives from the 2 countries. So we have a set of wonderful presenters here. My colleague, Jeff Allen from the World Bank, and then my colleague, Camilo Tellez from the Better Than Cash Alliance. And then we have 2 colleagues from 2 different central banks, Bridget Rose Messina Romero and Fadwa Jouali. Bridget Rose is from the Banco Central de Filipinas, and she's the acting deputy director of the Payment System Oversight Department. And Fadwa Jouali is the head of payment development and fintech at Banca Al Maghreb. So basically, what I would like to do right now is to introduce a little bit, give the background of why we have undertaken this work on electronic payments acceptance. So to do that, if I can perhaps use some visual aids from the first slide that we have, which should show a map. Yes. So this is a map from some work done by the World Bank and the World Economic Forum, which was published in 2016. So essentially what we had done back then is to think about electronic payments acceptance as a way of inducing further financial inclusion. So Universal Financial Access Goal advocates for the use of transaction accounts and digital payments as a means of entering into the regulated financial system by unbanked and underbanked individuals. But then, you know, owning that account is not necessarily helping. The account needs to be used. So the idea here is to think about how to make those accounts more useful to people. One way of doing that is to think about acceptance of digital payments by merchants. So in order to understand the market at the time, what we did is to try to size the market. And this was a very broad exercise at the time, which was not necessarily extremely detailed and didn't go into all the nuances that it could have, but it gave us a ballpark figure that there is this $19 trillion opportunity whereby merchants accept and use paper-based payment instruments for their daily transactions. And these are only micro, small, and medium-sized merchants. And these transactions are basically their sales, their wage and salary payments and their immediate payments to their immediate suppliers, not even the payments down the value chain. So essentially, this 19 trillion opportunity is really very large to be realized, and this is using the 2015 data. So that led us all to think more about how we can develop different toolkits, different roadmaps, different reform ideas to realize at least part of this opportunity and bring this into the digital payment space. So basically, without further ado, I'll just stop here and turn to my colleague Jeff to take this onward and explain what the FIGI Electronic Payments Acceptance Working Group intended to do. And then we'll hear from our other speakers. For instance, Camila from Better Than Cash Alliance will discuss how these tools were applied in certain settings. And then also we will hear from the policymakers themselves, Fadwa Jouali from Banca al Maghreb and Bridget Rose from the Central Bank of Philippines to see how they applied these reforms to improve electronic payments acceptance in their countries. So with this, I'll just stop here and turn over to Jeff. Thank you.
Thanks, Oya. And can we go to the next slide, please? Yeah, and maybe flip one more. Well, you know, as Oya said, this sort of simultaneous importance of EPA and sluggish uptake in some merchant segments was what motivated the FIGI EPA working group to develop really a package of guidance documents and technical notes to facilitate the development of electronic payments acceptance reforms. We call it EPA for short. And so that the goal really is reform. And so as you see up here, I mean, we anticipate three big phases of developing reforms. The first is conducting a self-assessment to understand which barriers to electronic payments acceptance are most salient in a given country. The second phase is developing a reform roadmap. And by reform roadmap, we're referring to recommendations for the selection of various incentives, policies, and other programs to advance EPA, then high-level design considerations and potential roadblocks, and also stakeholder coordination. The third phase is implementation, which really involves the specific design of the selected reform measures, then operationalization and monitoring. The package, the FIGI EPA package is mostly geared toward helping with the first two phases, that is self-assessment and the reform roadmap. It can help inform implementation, but it doesn't provide guidance on specific design and cost considerations because those will really depend on local circumstances. So then the individual EPA package components, as you can see up here, include a sort of overarching reform guidance and the self-assessment guide, then these three connected kind of technical notes, which include address incentives, innovations in EPA, and EPA intermediaries, and then the country assessments. Now, I should say we also have an executive summary piece we call the EPA reference guide, and this is really a high-level overview of the package. It is important to note that the detailed country assessments are not anticipated to be made public, but we do anticipate having some executive summaries that will be released upon approval from the central banks. Can we go to the next slide? So, we're going to I'm going to try to quickly profile a couple of aspects of the package, the self-assessment guide and the reform guidance. Although we do recommend starting with the reform guidance when you're processing the package, but we're going to start with the self-assessment guide here today because, for one thing, it's complete, but then also the sort of the framework underlying the assessment methodology does inform the reform guidance. Now, when you're reading the reform guidance when it comes out, the framework will be made abundantly clear, so there will be no confusion there. But it's still useful to start with the self-assessment guide here. Now, at a high level, the self-assessment guide is really geared toward helping stakeholders comprehensively assess EPA development and identify bottlenecks to electronic payments acceptance in local markets. Now, we organize the self-assessment guide according to three big thematic policy categories, which you can see up here. That is the retail payments ecosystem, the economics of EPA, and then legal, regulatory, and oversight issues. Organizing it this way is meant to help stakeholders evaluate related policy areas. Next slide, please. Yeah, it's important to note that the methodology in the self-assessment guide breaks down into even more granular components. So just taking as an example, the economics of EPA category you saw on the previous slide, that's then broken down into a series of subcategories. And you can see here, in this case, that includes acceptance, benefits, and costs, provider costs and risks, and consumer behavior. And those subcategories are in turn are broken down into a series of assessment elements. Now, these assessment elements are really the kind of unit of analysis in the self-assessment guide. And the guide provides a number of tools that help evaluate the specific assessment elements. Next slide, please. Just to give you a sense of what these assessment elements are, we kind of group them into four big buckets. The first is a series of indicators. We really propose an indicator for almost every assessment element. Now, some of these do need to be locally collected, but there are also some public indicators and ones that we've constructed. Then we lay out a series of assessment questions for each assessment elements, and these are important for sort of guiding thinking in each area. Third, we recommend a number of interview approaches for merchants, consumers, and payment service providers, and these can be adapted to specific instrument types. And then finally, for people who want to sort of aggregate the indicators into a more formal index, we recommend some index approaches. Next slide, please. All right, I'm going to turn very quickly to the reform guidance. I won't spend much time on this, but we did think it was important to highlight some of the reforms that the package envisions, because that really is the goal of this package. And also, it's a good segue to our colleagues at BTCA, because they're really going to be talking about some of the incentive implementations they've been undergoing with their members. And not focusing as much on the assessment component. But essentially, the reform guidance does two things. It provides a detailed overview of the self-assessment guide and then the incentives, innovations, and intermediaries notes. The package contains a lot of material. And so one of the goals of this reform guidance is to help stakeholders navigate the materials more efficiently. And then importantly, it catalogs in one place a wide range of EPA reforms. A lot of these are covered in more detail in other package components, but we expect that organizing them here in one place will really help in developing a reform roadmap. So just up here, I've summarized 6 big buckets of reforms. The first few of these really are akin to traditional economic incentives in the sense that they are geared toward changing the behavior of targeted agents, and those include fiscal and financial incentives, value-added services, and then some mandates and disincentives. And then we also cover, a range of measures that are geared toward, enabling EPA and creating longer-lasting, more sustainable EPA, and that includes some ecosystem development initiatives, legal, regulatory, and oversight improvements, and then technology and business model innovations. I'm actually going to freeze here on this slide and not really go into any more detail because we'd like to move on. But this just shows that the reform guidance is geared toward giving a high-level overview of a wide range of EPA reforms. I'm not going to go into the sort of taxonomy and mapping that the reform guidance does, but that's another big pillar of the reform guidance. Okay, with that, I think I can hand it back over to Oya and then our colleagues at BTCA.
Thank you very much, Jeff. I think we could just go to Camilo's presentation and please go ahead, Camilo.
Thank you very much, Oya, and thank you, Jeffrey. If we can please load the slides. Great. Thank you, Helen. So thank you again to our colleagues at ITU, the World Bank, the Committee on Payments and Market Infrastructure, as well as to the Bill and Melinda Gates Foundation for giving us the opportunity to be here today. As Oya said, my name is Camilo Telles, and I'm the head of the Digital Payments Innovation Hub at the Better Than Cash Alliance. Today, I'll give a brief overview of the work that we've done on merchant payments with some country examples before then we hear it from the countries themselves. We have Morocco today and the Philippines as well, who will tell us about their experiences. Next slide, please. So we'll cover three things today. First, for those of you who do not know the Alliance, I'll explain who we are. I will tell you about our involvement in FIGI and the EPA working group. I'll also run through some examples from our work with members on the area of merchant payment digitization, which builds, of course, on the great work done by FIGI that Jeffrey just presented. So next slide. And they're just starting to load them again. I'll wait. So fantastic, great. So the Better Than Cash Alliance is a United Nations-based partnership of governments, companies, and international organizations that accelerates the transition from cash to digital to reduce poverty and drive inclusive growth. Our mission is really to catalyze a global movement from cash to digital, to help achieve the Sustainable Development Goals. And we look for digital payments because they boost efficiency, transparency, women's economic participation, and financial inclusion. Of course, we're here for FIGI today. And more importantly, also to help build economies that are digital and inclusive. Next slide. The Alliance has 70 members, and we work with national governments in Africa, Asia Pacific, Latin America, prominent global companies and international organizations. As you can see in the slide, we work with our members providing advisory services based on their priorities. We also share action-oriented research and fostering peer learning, as well as conducting advocacy at national, regional, at global level. One thing that is important to note is that billions of dollars in cash payments are made daily in emerging countries. This includes salaries, social transfers, humanitarian relief, merchant payments, and of course, shifting these payments to digital has the potential to improve the lives of people of low income. It also means that for governments, companies, and international development organizations, they can receive payments cheaply, safer, and a more transparent way. We don't advocate for the abolition of cash. We aim for choice on how to make payments that really are inclusive and are being done responsibly. Next slide. Next slide. So here, basically, I just wanted to tell a little bit more about the work that we've done. As Oya mentioned, since the EPA working group started, the Alliance has participated in it. And the reason that we become even more involved is that throughout the years, our work with countries has led us to the payment stream of merchant payments, or P2B, precisely because many members are trying to drive the digitization of their economies. And of course, they see this payment stream as critical to be able to actually provide access to financial services to low-income people, to provide economic opportunities for women and for small merchants. And because of that, the role of incentives has really become critical for us to be able to promote digital payments in the economies. Next slide. So I wanted to just share some collective observations that we've identified on the work on merchant digitization and the challenges to scale. First of all, it's important to recognize that the digitization of payments is not often a high priority action for many merchants, until they actually see a long-term value coming out of it, which can ease some of their business challenges and pains. And this is why, as I was saying, incentives play such a big role here. We all know that credit cash flow management is, the primary need for many of the merchants in many countries. But it's also not the case. We can't generalize it. We always know that everything needs to be contextualized. Every market is different, even urban and rural areas, and the merchants within those areas have different needs. And it's important to take that into account. In other places, for example, security could be a key driver. The efforts to digitize payments of merchants should aim to provide a comprehensive value proposition to promote sustained adoption. The other point that I wanted to raise is that the cost of adoption remains a critical barrier for merchants. As we know, it's important to know that we've been working also with some companies actually to help them calculate here the cost of cash. And this is something that is critical for merchants to see a long-term value proposition, for small businesses to see a long-term value proposition and migrate to digital. And finally, the issue of formalization that is really important to take into account. I'll touch upon it in a second when I talk about some of our experience in Mexico, but it can really help merchant onboarding and digitization, specifically when we talk about the introduction of KYC, but also a lack of understanding, specifically on these tax issues, can demotivate merchants. So it's really important that governments are really aware of how the messaging is crafted around this area. Next slide. We have a growing portfolio of initiatives in various parts of the world which are focused on digitization of merchants and electronic payments acceptance. I'll just run through some highlights here. In Mexico and the Philippines, we form working groups comprising of both private sector and public sector entities that are trying to foster digital payments. I'll talk shortly also about India, where we're working very closely with the central government to promote adoption of digital payments by small merchants in rural and urban areas. In Ghana, Cote d'Ivoire, and Bangladesh, we're collaborating with the respective governments to develop policy initiatives to enhance the digital payments ecosystem. In fact, in Cote d'Ivoire, which is one of the countries actually where they have taken the FIGI framework and the incentives, and they started using it for the analysis actually now, and that the government wants to drive forward digital payments it's a really, really excellent example. And finally, in Pakistan, we're collaborating also with various stakeholders on advocacy and the scale up of digitization of small micro women merchant payments. Next slide. Now, here I just want to talk a little bit about Mexico, where there's two really interesting initiatives that relate to this topic. The first one is actually a working group that has been created. And this is basically following some action research that we did on opportunities for the adoption of digital payments amongst FMCGs and small merchants. This is the foundation for the working group. And the idea behind this was that we wanted to see how, through electronic payments acceptance, FMCGs and merchants could improve efficiencies, increase income, generate greater transparency. And the working group actually had calculated that by increasing, they could increase sales by 54% through the introduction of electronic payments acceptance. However, they found, as I mentioned earlier, that tax compliance is a big barrier and communications around it are critical. Yeah, and a couple of really interesting proposals have actually come out of this work. There's a proposal to simplify the affiliation requirements for small merchants. There's also a recommendation that FMCG incentives actually to small businesses are introduced to foster actually the digitization of these payments. In fact, one large company, PepsiCo, is actually trying to drive this forward now as we speak. So in the next slide, I'll talk about India, where we have a couple of three basically, different initiatives related to this area. The first one, as I mentioned earlier, the government has actually partnered with the Alliance to find innovative solutions for promoting digital payments in the Northeast. This is actually a massive retail opportunity because we're talking about $15 billion that would be created by digitizing the payments of 50 million merchants in the Northeast. And it's really critical to keep rural merchants at the core of initiative design. So therefore, the use of incentives that help create a value proposition, to make digital payments more convenient than cash is really important. Second, through one of our members, Unilever Hindustan, we have started an initiative which focuses on rural women merchants called the Shakti Amas. And we're working with them basically to digitize their payments and order placement through an app. This initiative is focusing on prioritizing on women merchants who are providing essential goods and services at the last mile. And here, of course, as we know, digital payments are critical in linking them with formal credit providers, thus enhancing the overall financial, their financial value proposition, and of course, financial inclusion for them and their families. And due to the success of this initiative, now Unilever Ethiopia is also testing this in their markets. And finally, in the next slide, just wanted to also mention, I mean, this year we had a great event, a Merchant Digitization Summit in India with industry body FIGI, the Indian government, as well as the Alliance, with a special focus on the Northeast regions and the Himalayan regions and aspirational districts of India. And again, you know, the focus of the summit really was to bring public and private sectors together to accelerate payments. As I had mentioned, we're working on designing basic initiatives at the state level, hoping that this will help us catalyze actually an ambitious target that the Indian government has now set out of 1 billion digital transactions daily, which is massive. So it's a great opportunity. So that being said, I just wanted to give you a little bit of an overview of some of the work that we're doing across our members on this topic. Thank you very much. And now I would like to pass it on to our colleagues from Morocco and the Philippines to tell us about their experience. Thank you.
Thank you, Camilo. I think we now have a video from the Philippines. Please go ahead if that's the video.
Hi, I'm Bridget Rose Messina Romero. I'm from the Payment System Oversight Department of the Bangko Sentral ng Pilipinas, and I'm here to share with you our experience in driving electronic payment acceptance in the Philippines. I would just like to briefly share with you how the BSP has been tracking the progress of our initiative to increase digital payments adoption throughout the country. Here you can see that as early as 2015, we have already begun our digital transformation journey, starting with the launch of our National Retail Payment System Framework that aims to establish interoperability among payment systems so that we can achieve our policy objectives of safety and efficiency. And here you can see in the timelines that we have established also our automated clearinghouses of PesoNet and InstaPay, which will be the fundamental digital payment rails that we will be using to build other payment use cases, such as merchant payments, in order to widen digital payments usage in the country. The BSP's approach to digitalization has always been motivated by evidence-based policy formulation. So as shown earlier, we started our journey way back in 2015 as a result of the first ever diagnostic conducted by the Better Than Cash Alliance using 2013 data. And back then, what we saw was that the digital payments adoption in the country was still low at about 1%. And then we launched the series of initiatives. And by the year 2019, the Better Than Cash Alliance again helped us in conducting another diagnostic to measure our progress. And here, what we saw were encouraging because we see that digital payments increased, but we also saw that there were certain use cases that we can leverage on in order to further tip the scales towards greater digital payments usage in the Philippines. We see that among all the payment uses in the country, the merchant payments remain to be the bulk of the total retail payments. So it captures over 70% of the total payments in the country. It's important to strategically address the challenges and issues that impede this critical sector to fully realize the great opportunities that digitalization promise. So the transition to digital payments for us should provide social, economic, and financial benefits, in addition to, of course, furthering financial inclusion, poverty reduction, technological innovation, efficiency, and lower costs. So we see that although the merchant payments comprise 70% of the total retail payments, its digitalization remains to be at a low level. That's why we really focused on converting this type of payment use case into digital form. And to do that, one of the areas that we looked at is on improving electronic payment acceptance of our merchants. Specifically, the micro, small, and medium enterprises, which comprise about 99% of the total businesses registered in the country as of the end of 2019. So here we would just like to share with you how the initiatives that we have rolled out contributed to the greater adoption of digital payments in the country, and the latest initiative that we have pilot launched just this year in order to address the digitalization of merchant payments. We have here the PESONet and the InstaPay. As mentioned earlier, our PESONet is our batch electronic fund transfer facility. Meanwhile, InstaPay is our fast payment electronic fund transfer facility that's available throughout the country, all throughout the year, even during weekends and holidays. And InstaPay is a digital payment rail that is being used to power our QR code-based national standard, which is what we call QRPH. And QRPH has two uses for us. The first would be the digitalization of person-to-person payment use case, and this one was launched in November 2019. The other use case that we have is the payments from person to merchant, or what we call merchant payments. And this one was pilot launched just last April 30, 2021. This person to merchant QRPH payment service aims to provide our merchants, specifically our small economic actors, such as those that you are seeing in the screen right now. We have wet market vendors, we have tricycle drivers, and we have small ambulant vendors as well. We aim to provide these types of small economic actors with very convenient, simple, easy to use, and affordable ways in order to make and receive digital payments. Even as we're building on the digital payment rails and promoting interoperability as well as safe and convenient digital payment services, we continue to look at and study what are the ways that we can further build consumer trust and also value proposition of digital payments for our micro, small, medium enterprises. Again, our focus on the MSE sector is based on data because they comprise really 99% of the total businesses in the country. So we've identified some issues that based on our assessment of their concerns in order to adopt digital payments. And some of these would be, for example, for some e-commerce platforms, what we're seeing is that there is a boost in the number of online resellers coming from the pandemic. However, the primary mode of payment remains to be cash on delivery. Another is that although many have already flocked to e-commerce platforms in order to buy their essentials or even other needs, they still have difficulty in accessing digital payment services in the platform. And sometimes the reason could be it's also costly or it's not affordable for either the customer or the merchant or both. So what we want to address here is all of these issues, and we can see that the QRPH or QR-enabled payment services can help us address these issues. Because if a customer, for example, is inclined to make payments at the point of delivery, then the logistics partner can simply bring the QR code at the point of delivery, and then a digital payment transaction can be made. The same can be said for the two issues that we mentioned earlier, because if the QR code is displayed on the e-commerce platform, then the customer need not study how to pay digitally on the e-commerce platform, because it will be as easy as just taking a picture, scanning it on the mobile phone, and then authorizing the payment, because all the account information and details would already be embedded in the QR code. And other issues that we have identified is related to the costs, such as the merchant discount rate. What we're seeing here is that we have to study what are the suitable fee structures, like MDR fee structures, for our smaller retailers and distributors. And we also want to study how they can digitalize other parts of their supply chain, not just for the big merchants, but even for their smaller retailers and distributors. In order to address the issues, the BSP has been working with the Department of Trade and Industry, and also with our merchants, such as e-commerce platforms and retailers, in order to address the issues and to find solutions that are acceptable to both the merchants and also that can be readily addressed by our payment service providers in the country. So here we just want to share with you that the BSP has unveiled its digital payments transformation roadmap for the period 2020 to 2023 just last year. It's a very opportune time for us, especially as we have seen that the pandemic has really acted as a catalyst for digital payment adoption in the country. The quarantine protocols and other health protocols that were placed throughout the country really compelled everyone to convert and to shift their preference to digital and contactless payment options in order to mitigate health risks. We just want to show you here that the roadmap that we have takes into consideration the need to consult stakeholders, which is very critical, as we've seen in our study of electronic acceptance by merchants in the country. And we're also continuing to build on digital payment streams that would address merchant acceptance. And we're also building a robust and resilient digital finance infrastructure to support the increased adoption of digital payments in the country, while at the same time ensuring that appropriate digital governance standards underpin the activities of our financial and payment service providers throughout the country. Here, we just want to share some of our initiatives in the pipeline that aim to further digitalize the specific payment use case of person-to-business payments or person-to-merchant payments. As mentioned earlier, we had a pilot launch of the QRPH last April 30, and we aim to have the full launch of this QR code service for person-to-merchant payments by the third quarter of this year, later this year. And immediately after that, we also plan to have the bills pay facility rolled out. This one aims to address the fragmented bills payment collection arrangements in the country, just to make it more efficient. And then another would be our PESANet multiple batch settlement. This just increases the batches by which PESANet electronic fund transfers can be made, so that beneficiaries can receive the funds earlier during the day and not just at the end of the banking day. Another would be our direct debit initiative, which is slated to be rolled out next year, 2022. And this one just aims to make interoperable the auto debit arrangements in the country, so as to make it more efficient and easier for everyone to access. And finally, we're working with our Department of Labor and Employment towards the digitalization of wage payments. Recently, this department has issued an advisory encouraging employers to disburse the salaries and compensation of employees into transaction accounts. Transaction accounts can be maintained in a bank or in a non-bank e-money issuer. So going now to the questions. I think that in the case of the Philippines, we have seen that it's very important to look at the root cause. For example, in our case, when we saw that our digital payments adoption in the country was very low way back in 2013, the diagnostic really helped us, the diagnostic conducted by the Better Than Cash Alliance, it really helped us identify what were the barriers as well as the opportunities for us to move forward and drive up the usage of digital payments in the country. And similarly, in that diagnostic, we saw that one of the things that really hindered the wider digital payments adoption was the low merchant acceptance of electronic payments. And that includes the cost as well to the merchants and to the customers. So it's important to have an assessment because it serves as a stock taking of what's the current state, and it helps you see what led you or what's the cost for the current state. And then you will see what's currently working and not working in this current state, or if it's working, how can it be further improved? And that's basically what we have been doing for several years now. So we've been stock taking, we've been identifying the root causes, we've been engaging actively the industry from the demand side and the supply side, working with them to identify what's working and what can be improved. And then when we launch the initiatives, we also periodically assess if the initiatives really are addressing what we want to address, and to check what further needs to be done in order to get where we want to be. Basically, that's the overall increase of digital payments usage in the country so that we can have a safer and more efficient retail payment system. Based on several sources in our end, we have diagnostics conducted again for us by the Better Than Cash Alliance, and we also have our biennial financial inclusion survey report commissioned by the BSP. We have seen that there are several reasons why acceptance of non-cash payments among merchants is still prevalent. Among this would be among the consumers, for example, there would still be low awareness, and sometimes there's this perceived lack of trust in the service. And this can, of course, be addressed by our continuing digital financial literacy campaigns, which we have intensified, especially during the pandemic, because everyone was going digital. Everyone was turning to how to digitalize not just their payments but even their processes. And because of everyone flocking to digital options, there is a heightened risk as well of cyber security threats and similar types of risks. So that's why we also have to intensify our public information campaigns so that our consumers can be made aware not just of the benefits of doing digital payments, but also the responsible use of digital payments. From the merchant side, what we've seen again is the cost, as well as education, letting them know how it can help them, how they can use it. So that remains to be among the main issues that we have encountered. And we have seen this not just from the reports that I mentioned, but also from our dialogue with them. The BSP has this working group with the Department of Trade and Industry, wherein we have been periodically speaking with the merchants in order to better understand what are their issues in accepting electronic payments. And those that I mentioned earlier, the prevalence of cash on delivery, the difficulty of their clients in using digital payment service, even if it's already an online platform or an e-commerce platform. Those are the things that remain to be the issues that we need to address and that we are also currently addressing with our initiatives. there were a few key challenges that we have encountered in assessing the electronic payment acceptance of merchants in the country. Maybe foremost is that we have a lot of players. We have a lot of small players. So our market in this sense, it's fragmented. So in order to be able to capture the representative sentiment, for example, of the merchants, we really have to go out and reach out to this fragmented market. And then aside from that, um, as mentioned earlier, the micro merchant sector, it's really more than the majority. It's 99% of the total businesses in the country. And to top it off, the micro merchants can sometimes comprise of informal merchants in the country. And this one would be difficult to get information on. So that's ultimately one of the main challenges, the difficulty to get information about their arrangement, and that would help us better assess why they have difficulties in accepting electronic payments. Their business arrangements, as of the moment, it's not that transparent to us. And that is also what we are studying right now, what policies we can put in place so that business practices can be standardized if possible, so that reasonable principles can be applied to this types of business arrangements, and so that there is also transparency to the regulator. So the policies and initiatives that we deploy, they only address the assessments that we make based on the information that are available to us. But there could be others that are not available to us that we may not be addressing as responsively or in the way that it should be addressed. For us, what we have seen, what's really important in order to promote the electronic payment acceptance uptake in a more collaborative and coordinated manner, is really to open up the communication channels. So as a central bank, we're primarily the supervisor of financial institutions, which in our country, fortunately, comprise most of the payment service providers in the country. At the same time, we're also the overseer of payment systems. So we definitely have a very open communication line to the financial and payment services industry. But what we've seen for the past several years that we have undertaken this digital transformation journey is that aside from undertaking the reforms from the supply side, we also have to simultaneously look at the demand side to better understand what needs to be addressed in that area. Because it's not enough that you build the rails, that you offer them in an affordable service. You have to reach out because they may have other concerns that also need to be addressed, and that is where the regular dialogues should come in. And we have started to do this. As mentioned, we have been working with the Department of Trade and Industry so that we can speak with the merchants and to understand where they are coming from. And then from there, we assess internally what we can do as a central bank, what are the policies that are needed, if there are any, or what interventions we can make to help payment service providers better understand their needs. On the government side as well, because in the roadmap, what we really espouse is that we have this not just whole of government, but whole of society approach, such that we engage everyone, all the stakeholders from the demand and the supply side, and then from the public and the private sector. So we have to engage all of them. With respect to the policy making side, that would probably come from the government. The DSP is also part of this technical working group in the government side. And this technical working group is actually dedicated to address digital payments adoption by the government. And this includes the revision or revisiting of policies, studying the policies that we have in place right now, identifying if there are any gaps or if there are any enhancement that we should make in order to encourage digital payments adoption in the country. And so that would be on the policy making side. We're also engaging with our legislators because, as I mentioned earlier, a lot of Filipinos have already started going digital, especially with the onset of the pandemic last year. So our legislators have been proactively um, filing legislative measures that would help the digital payments transition in the country be smooth and also easier for the Filipinos. And this legislative measures are something that we also support because, of course, it helps us to increase digital payments adoption in the country. And this is how we can see that all all actors within the government are also trying to do their part in supporting this digital transformation. The assessment of electronic payment acceptance by merchants in the country, it's not really a one-time thing. It's continuing. So when you first make the assessment, of course, you have to address what are the results of the assessment. And then afterwards, once you have established what are needed, like initiatives, policies, and reforms to address the results of the initial assessment, you have to periodically track the progress. And in that sense, you're also assessing again the electronic payment acceptance in the country. So I think as policymakers, this is something that it's a work that will not stop for us. We have to continually assess and to closely track and monitor the progress. So it's a continuing work for us and even the collaboration side because the payment landscape, not just in the Philippines, I'm sure even in other countries, it's continually evolving. And one of the reasons is, of course, the rapid technological innovations. And that's why for us, we continue to be very proactive and very open to innovation while still ensuring that our regulated entities are able to manage and mitigate the risks associated with these kinds of innovations. That concludes my presentation. I hope that what I shared with you today shows the BSP's commitment to support the delivery of universal access to safe, affordable, and convenient digital payments for all Filipinos. A pleasant day to you all. Thank you.
Thank you very much. And now we turn to Fadwa Jouali from Banca Al Maghreb for her remarks.
Thank you very much, Oya. Can I have the slide, please? Thank you. First of all, thank you very much for having us to the FIGI initiative, and also thank you for having us in the working group, EPA working group from the beginning. It was very helpful for us to understand some key barriers that we have to address and some initiatives that we have to done in our country. So I will talk about Moroccan electronic payment acceptance and the assessment, the first conclusion that we have from the assessment done by the World Bank Group. And next slide, please. But before, I will give you some insight about the strategic vision of Central Bank of Morocco. So what we want from the first strategic plan of Bank Al Maghrib is to create an enabling and a secure environment for electronic payment development. So we have set several objectives that have been run from the first strategic plan. each new strategic plan, we reaffirm the new actions and new development of policies and the regulation that we have to set to really help the market to be developed and to develop acceptance in particularly. So we want also to promote digital financial services by setting up as one of major pillar of national financial inclusion strategy. And also we have set a regulatory approach to have the fintechs in our markets and to see how we can have a competitive payment markets with this new entrant. So for the latest strategic vision 2019-2023, so the main objectives that we have is to strengthen again the credibility of new means of payments and have some confidence in the usage from the public, developing the payment methods and having some innovation on the market and using technology to enhance acceptance in Moroccan market, and also to introduce another players to have a competitive market and let the price down. Next slide, please. So we have here 5 objectives that we have set for this strategic plan. So the first one is really to have a competitive market for payment services, especially for the acquiring activities. So we have a very good issuing activities in Morocco. So we have a good level of cards payment issuance and mobile payments also, but the usage are very low for payments. So we want to really accelerate these acquiring activities by having new actors in our market. Also, another objective is to remove the opacity and having some transparency of having access to the payment systems for the new entrant, and having some transparency on the charges which is applied to the merchant and also to the PSPs from the switch, for example. Another objective is to really enhance the development of mobile payment services by giving an alternative payment way to the consumer and setting up a solution that is interoperable and instant at the same time, and having some added value to the end user. Also, we have another goal is to digitize payments, government payments, and also private to private payments as a lever, or giving it as a major lever for financial inclusion. So we have to really adopt the channel of giving the ads and the payment of the government. So all that we have 2 objectives from the beginning is to reduce the usage of cash, which is very costly for the economy in Morocco, and also rising financial inclusion. Next slide, please. Here is just to give you some background of the Moroccan payment development. So in 2002, we had no interoperability of payment transactions. It's in 2 years after that that the banks have created a CMI, which was an acquirer, the only acquirer in the market, and also a payment switch. But this situation have created a monopoly situation. So we have run this until 2014, where the central bank have the guideline to separate from the switching activities from the acquiring activities. And we have given the license to another switch to be more transparent and more open to other players in the market, and also opening the acquiring activities by introducing payment institutions that can also operate in acquiring field. And in 2018, we have launched the national mobile payment solution under the name of Maroc Pay. So it was an initiative with all the ecosystem. So we have all the stakeholder around the table, just to have a new mean of payments that can really enhance payments in Morocco and also rise financial inclusion. In the last 2 years, in 2020 and 2021, we have introduced some tax incentives and also some relaxed KYC to the customer, just to have more opening of transaction account or banking account that can lead the consumer or the user to use their mean of payments to pay. And also this year, we are working with the government to have some pilots to digitize some ads and some payments, government payments, using mobile payments or using card payments. And also we are working drastically on education and communication. So we have to set an action plan on communication, just to face the lack of information that we have, especially in rural zone. And also we have a good news that government is doing a reform of the program, reform program to address social and economic inclusion. So we can, from the beginning, having this component of payment, electronic payments at the beginning of the reform. Next slide. Next slide. So as I said, the introduction of payments institution was here or was introduced to increase the competition, to let the cost lower, to have more product, and to correctly respond to the needs of the population, to reduce the usage of cash and increase awarenesses of financial services. Up to date, we have 16 payment institutions that was licensed since 2017, and we have 22 M-Wallet product that was launched in the market, and we have a really good rates of issuing mobile wallets, but still have a very low rate of usage of this mean of payment as a mean of payment of some transactions, daily transactions. Next, please. So for financial inclusion strategy, it's a very good thing that we have launched in 2019, because it's given us the opportunity to have all the stakeholders in the public and private sectors at the same level. And we can discuss all the objectives that we have, including promoting digital financial inclusion. So as one of the major pillar that we have is really developing the usage of mobile payments, having some incentives on that, and having some use cases that we can have that will be offered by mobile payments. For example, we can have a micro lending, we can have insurance on that offer, etc. So we are working with all these stakeholders to really have a roadmap prepared and having some actions with all the actors. Next. A quick review of mobile payments ecosystem that we have built since 2016. We have all the stakeholders with us. So we have banks and payment institutions, and also we have the switch. So to have the mobile payment now, which is Maroc Pay, it's an interoperable and in a real-time solution. It's a mean of payment that is based and can be issued based on a mobile transaction account or a banking account. The unique identifier is based on the phone number, and it's allowing to do transfers, payment, cash in and cash out. And maybe we have some offers that are offering more value added services to their users. We have also published regulation to have a regulatory framework for this new mean of payment. So we have, for example, have all the obligation that we have to respect as an issuer to protect our consumer to manage the risks, especially cyber risks, having set plenty of free services for the community, and also it's very important for acceptance, limit the interchange fee as 0.5% as a maximum. So all these efforts was done just to have another mean of payments or in alternative way to give access to payments for all the population at the best cost. Next. So some action that we have already done is that since 2018, where we launched the solution, we have developed, done some development on the user journey to making it more friendly and more smooth. So we have the generalization of QR code. So we have a QR code, a standard QR code that is AMV code. We have introduced specific measure relating to financial inclusion. So we have lightened the condition for opening the account. So we can proceed to eKYC for bank account opening, for example, and we can also open 2 levels of transaction accounts just with the phone number and identity card scanned. We have also introduced a governance body that is an economic interest group for having a better synergy between the actors and the players, and having a consortium of technical and commercial incentives that they can launch. We also working with all the stakeholders of the financial inclusion strategy on how we can widen the network and especially for agents and payment agents. So we are working with the Ministry of Agriculture. We are also working with FMCGs to see how they can give some added value to all the chain value. And finally, we have a very a good participation of the government, especially since the COVID-19 crisis, because they know and they are very conscious about the importance of having digital financial services, especially when we have the government aid that have to be transfers to all the impacted population. So we have introduced in 2020 some tax incentives. We had an amnesty for 5 years for merchants. And also we are working with them to have some more communication actions for merchants and also for the end users that are a population addressed by the financial inclusion. Next. So promoting financial education is very important, and we know that because since we have run some focus groups with the merchants and also with the users, we have noticed that there is a lack of information. So we have to have some strong campaign or communication campaigns based on videos or spots in the radio, but they have to be very didactic and educational. So we have launched several videos that are given some use cases and explaining how we can use our mobile payment, and also have some paper-based guidance. So we have published a guide to the mobile payment users just to have this confidence on the use of mobile payment and say that all these means of payments are oversight by the central bank and you can use it securely. Next. So despite all these actions that I have said, electronic payments still very low in Morocco, and cash still the king. Next. And if you see the statistics here, you can understand why we are saying that it's very low, because we have a very good insurance issuing activity. We have 17 million debit cards that are issued, and we are 25 adult population. So it's more than the half of the population that have a payment card. But we still seeing that payments are 25%, but withdrawal is very important. So what we see is that the usage of credit card or debit card are used to withdraw the funds, and after then doing all the transaction in cash. And it's not very the objectives of the central bank. The need, what we want is very to have this digital cycle and this digital ecosystem from the bottom to the end. The most important transaction type that we have is the payment at merchant. So the merchant is very important in our ecosystems, and we have to really develop this activity and develop the acquiring activity specifically. Next. Same thing for the mobile payments. So for the year of 2020, we have seen that there is a lot of effort that was made to open mobile wallet. So we have 2.4 million M-wallet that was opened at the end of this year. But we still have a low activity on those wallets. So 2011 or 30% as an average of active M-wallets. And the expected average of transaction size is very surprising, because we are not talking about small transactions, but we are talking about 20 to 30 euro transactions. So which is very big for a market like Morocco. And also in the payment structures, what we notice is that mobile payments or mobile wallets are used for bill payments more than for merchant payment or for transfers, for examples. Next. So some first conclusion that we have from the API assessment that will be run from the November 2020 till today is that it's still having some barrier in Morocco. So the first one is that the financial access still very low, because we have 51% of adults that have a bank account with a very an important gap for gender side and also for geographical side. Also, we have this cash culture. So cash is the preferred payment instrument for retail payments. And it's very used by the government, the corporate, and also banking sectors. Some of the root cause is that the informal economy is very important in Morocco. So it's one of the causes that we can have or that we can address. We have also 90% that are of transactions that are done in cash, even for person-to-person payment or person-to-business payment, and also to business payment. So paper-based mean of payment still king in Morocco. So they are using checks, they are using some letter of transfer, they are using cash, but they are not using electronic payments. And also we have one of the insights that we noticed is we have an easy access to cash withdrawal from ATMs. So if we have these facilities, so people are very comfortable to go and withdraw his money to do his transaction with cash. Also, what we have noticed is despite the mobile and internet penetration and the usage that we have and the development of e-commerce in Morocco, we still have the cash on delivery very high. So people are not choosing the payment gateways, they are using cash on delivery to be more sure to have their product and also to be sure that it will be secure. And also we have some issues on payment services costs. So when we are talking to merchants, they still saying or judging that the MDR are very high in Morocco, especially for the very small businesses. And from the side of demand or from the consumer, when we have some discussion with them or focus group, they are saying that they have not seen a very value added of using electronic payments instead of cash. Cash is very easy, cash is free, and cash is very comfortable for them. And also we have some remarks for new payment institution that was licensed. They are working on the both side. They are working on issuing and acquiring side, but they are developing the issuing part more rapidly than acquiring side. But because we have only 3 acquirers now that are operational with the domination of one actor, which is CMI. So we're still waiting of the conclusion or what we want to have from the opening the markets of payments. Next. So if you want to summarize the 5 barriers that we were and identify from the EPA assessments, is that one is we have a strong preference to cash, and the adoption of electronic payments by the consumer and the merchants are very low. So we have to see how we can really disincentivize the cash maybe, and having some incentive for electronic payments to enhance the development of payment acceptance. Also, the mobile wallet adoption remain a challenge for us. We have built the ecosystem, we have done some regulation, we have limited the interchange fee, we have some incentives, but it's still very, very low. So we have maybe to raise again the communication and financial education in that way. Third barrier is the lack of clarity on the application of simplified identification rules. So we have introduced some simplified KYC in 2020, but the majority of merchants and consumers doesn't know that this possibility exists. So the payment institutions and banks have to communicate about this possibility to open remotely banking account or transaction account. Fourth one is the lack of the competition on acquiring side. So as I said before, we have licensed 16 payment institutions, but most of them are working on the issuing side and giving less importance to the acquiring side because it's very difficult and there is a risk aversion beside the acquiring activities. So they are focusing on what is profitable for us, for them. And the last one is the first fear of traceability by the tax authorities. So it's a very strong barrier that we are facing. So even we have introduced some significant changes and incentives in tax systems, people still have this fear from tax authorities. Next. The most useful indicators that we have noticed in electronic payment acceptance assessment was the economics of EPA and payment and acceptance costs. So there is a lot of action that was led by the central bank, but we still have some action to do. For example, for the merchant service charges, have declined over the past years from the 1.52% to 1.21 in 2019, but still very high for small merchants. We have a common interchange fee that are applied to all, approximately to all the businesses, which is in the middle of 0.9%, which is very high if we compare that to the European market, for example, where we have 0.2%, for example. We have also this conclusion that the scheme fees are very high and they are increasing in the last period. So the increase from 6 to 9%, and it's very impacting the final merchant discount rate. So what we have here, maybe it's the time to have our own scheme just for local transactions. And finally, the acquiring margin are decreasing in the last 3 years. So maybe the acquiring margin is not very interesting for the new entrants. So they want to go on this activity and still having the issuing activities as the main activity of their business. Next. Some recommendation that we have from the World Bank at this stage, and which is still under validation of our central bank, but it's very insightful to have it here. It's we have to set a legislation to require the use of non-cash payment, especially for government and corporate payments, salaries, and transfers. Maybe it can be one of the solutions that can enhance the development of payments in Morocco. Also, I see how we can optimize the interchange level, maybe with the regulation of interchange fee for card payments, address the acquiring dominance of one actors and having more actors that are innovative, maybe introducing some aggregator and facilitator of payments that can have some dynamic on the market. Address the barrier related to issuance and the acceptance of mobile wallet by using government payments as a first use for the population that are for the population of financial inclusion, and make the withdrawals or the cash out more expensive for consumers. Also promotes electronic payment acceptance for payments that are made by consumer and businesses for government. It can be one way that we can oblige the population to use or to try for the first time electronic payments. And finally, implementation of a risk-based approach for merchant due diligence. Next. I think it was this. I have removed the last slide. Thank you very much.
Okay, great. Thanks a lot, Fadwa, for your presentation and insights. That is very interesting to see. So I would like to invite you to see if you have any closing comments, Fadwa, and then I'll go through the other panelists as well.
Sorry. As a closing remark, what we see from the Philippine experience and Moroccan experience is that regulators are facing the same issues. So we have to work together just to have what is working and what is not working, and really have this effort on this recommendation that we have to set. Also, what we have what we see in the market, we have the payment markets are a two-side market. So we have this problematic of the chicken and the egg. So we have to develop the acquiring activities or developing the issuing activities. So maybe the consumer will let the merchant to accept electronic payment, or it will be the reverse. So we have to really see what is working in other countries that are similar to Morocco, and maybe all the developing countries are facing the same barriers, especially taxes barriers, and also the fear of usage of electronic payments, etc. And also having this root causes will be very helpful for us to discuss all this with all the stakeholders of the financial inclusion strategy and see how we can improve the payment acceptance and digital uses in Morocco. Thank you.
Thank you very much. Camila, do you want to come in?
Yes, thank you very much, Oya and Fadwa. So as we heard from our from the countries, from Morocco and the Philippines, it's obviously the digitization of payments and electronic payments acceptance is a long journey. Don't forget about the demand side. Ensure that everything is contextualized, and more importantly, that there is enough of a value proposition actually for the merchants, not just to initially, digitize and, take electronic payments, but for them to sustainably be able to use this as part of their business model for long-term growth and sustainability. Thank you.
Thank you very much. Jeff?
Sure. Well, I'll just close by saying that, we're working to get the EPA package out this year. I noticed some of the great questions in the Q&A panel, and a number of components of the package will address some of those questions in more detail, especially related to emerging payment methods and informality and merchant due diligence and KYC compliance. And so just keep your eyes peeled for that as we work to publish it later this year. And we're very grateful to the members of the working group who've provided great inputs, and we hope the EPA package will help advance merchant acceptance globally. So thank you.
Thank you very much. Thank you to all our panelists. And I just want to now close the session by basically saying that this is an evolving topic, and we have been putting a lot of effort into studying it, but the more we study, the more we find new things to study about it. And essentially, the whole issue of improving electronic payments acceptance includes a variety of different items, which is very comprehensive and complex to tackle. Overall, it relates to the entire ecosystem development. It relates to having the right infrastructure in place, right regulations in place, right payment instruments in place. At the same time, the innovative business models come in. And then you have to think about the right incentives, right mandates, and right disincentives in the sense of, pushing people to use it more, as well as merchants to accept more. So at the same time, this also involves a lot of awareness and education activities as well, because by nature, people are very much used to using cash, but they're not really always well accustomed to using electronic payment methods, and they need to be able to feel confident about that and trust the system. And therefore, it has a lot of dimensions and a lot of actors, and it's a very complex issue to tackle. And as Fadwa had also suggested, regulators are facing similar issues, and there's a lot to learn from each other. And BTC and World Bank and other development partners, we're all here to work with you and push this agenda forward. Thank you very much. This is our session for today. And I believe that you have a satisfaction survey popping up right now. And basically, thanks for attending, and thank you all for our panelists.
Thank you, everyone.
Thank you.
Thank you.